I wish I have more time to develop my hobby. I enjoy pottery making as every step in the process can shape a piece differently. Similar with retirement planning, every investment decision will impact the outcome of your wealth accumulation. Keep abreast of the market conditions as they can help you achieve your financial goals. In the fourth quarter, markets will be eyeing the impact of tapering by the Federal Reserve. Although the US economy is seen as having decelerating growth, the overall growth rate is still satisfactory. Markets have also arrived at the consensus that tapering will commence in the coming few months. Therefore, as long as the economic momentum remains unchanged, the impact of tapering on the economy and asset prices may be relatively limited. With reference to the Fed's tapering in 2013, both equities and bonds had recorded positive cumulative returns in 1 year. Global equity had experienced a temporary retreat, but the return still reached about 5% after a year. In 2022, the balance sheets of major central banks in developed markets may remain expansionary. The overall global financial conditions are expected to still be accommodative, with global vaccination rates steadily increasing and the threat of the Delta variant beginning to be contained. The global 7-day average of new cases is gradually coming down, favoring the reopening of countries that were seriously affected, such as the US and China. However, the market should not ignore the risk of a resurgence of the pandemic, a continuously elevated inflation that may change the expectations on Fed's rate hike decision, and the contagious industry regulations triggering systematic risks in China. Everyone has critical moments during all stages of their life. At these times, your financial goals may change and you may need to adjust your investment portfolio. Developed markets have clearly outperformed emerging markets over the past quarter. In the new quarter, we believe the trend may sustain and continue to lag equities. Among them, we are most optimistic about Europe due to the solid pace of economic growth, ongoing accommodative monetary policy, and the prospect of fiscal stimulus. We are slightly optimistic about the US. The Federal Reserve is more likely to not raise rates until late 2022, even though tapering is on its way. The economic and corporate earnings growth are still expected to be relatively impressive. We are also slightly optimistic about Japan. Although the local economy is relatively weak, the new wave of the pandemic has receded from the peak, which may be favorable to its economic reopening. Asia is neutral. Some countries are expected to reach herd immunity by the end of the year, which may help their economies to catch up with the developed markets. However, more countries may begin to tighten monetary policies to curb rising prices. We are slightly bearish on Hong Kong stocks and neutral on A-shares. With the intensifying downward pressure of the Chinese economy, both fiscal and monetary policies are expected to be more supportive. However, there is a chance that the regulatory restraints in the mainland may continue to impact the performance of the Hong Kong stock market. For bonds, we maintain our neutral view overall. It may be difficult for the US 10-year Treasury yield to rebound significantly due to slower economic growth and the belief that inflation expectations may have peaked. Therefore, we have adjusted upwards our views towards sovereigns to neutral. In view of slowing economic growth, capital may prefer relatively high-quality corporate bonds, and therefore investment-grade bonds have been adjusted upwards to slightly optimistic. Even if you're approaching retirement age, you can choose to continue to accumulate wealth or receive stable income, mastering a fulfilling second part of your life journey.